Welcome back to Explain the Charts. Today, September 9th, 2024, we're diving into the NZDUSD pair, analyzing the latest news affecting this currency pair and how it's reflected in the charts. Let's start with the news. Recent headlines highlight a strengthening US dollar, driven by expectations of the Federal Reserve cutting interest rates. Investors are rushing for safe haven currencies like the US dollar, which is pushing the NZDUSD pair lower. However, the New Zealand dollar is also facing its own pressures. China's August Consumer Price Index, CPI, came in slower than expected, suggesting a weak demand environment and potentially impacting the NZ economy. Now, let's turn our attention to the charts. On the daily chart, we can see a clear downtrend over the past few weeks, with the NZDUSD pair breaking below multiple support levels. The pair recently fell below the 0.6150 level, which was a key support area. This break signals a bearish momentum and potentially opens the door for further declines. The 20-period exponential moving average, EMA, is also declining, further reinforcing the bearish sentiment. The 14-period relative strength index, RSI, is also in the bearish range. Looking at the recent candles on the daily chart, we can see a series of lower highs and lower lows, indicating a clear downtrend. The current candle is also showing a strong bearish momentum. Moving to the 1-hour chart, we can see a more detailed view of the recent price action. The pair has been trading in a downward channel for the past few days. The break below the 0.6150 level was also evident on the hourly chart, with a series of bearish candles confirming the downtrend. Zooming in on the 15-minute chart, we can see even more granular price action. This time frame reveals how the NZDUSD pair has been testing support levels throughout the day. In the past few hours, we've witnessed a series of bearish candles, showing a sustained selling pressure and pushing the pair lower. This suggests that the market sentiment is currently bearish. Looking at the current candle on the 15-minute chart, we can see a continuation of the bearish trend. The price is currently testing the 0.6180 level, which could provide some support. However, if the bears remain in control, the pair could easily break below this level. In conclusion, the NZDUSD pair is facing a bearish outlook. The strengthening US dollar and weakening New Zealand dollar are creating headwinds for the Kiwi. The recent break below the 0.6150 support level signals a bearish momentum, and the pair could easily continue its downward trajectory. Key price levels to watch: the 0.6180 level on the 15-minute chart could provide some support in the short term. However, a break below this level could lead to further declines towards the 0.6150 level. On the daily chart, the 0.6100 level could act as a key support level. However, the bearish momentum suggests that this level could be easily breached. Things to watch: the release of August's inflation report in the United States could provide further clues about the Federal Reserve's future policy moves. A larger-than-expected cut in interest rates could further strengthen the US dollar and weaken the NZDUSD pair. Another important factor to watch is the economic data from China. If China's economy continues to weaken, it could further impact the NZ economy and put more pressure on the New Zealand dollar. Keep an eye on these key levels and economic data releases, as they could significantly impact the direction of the NZDUSD pair in the short to medium term. Remember, the market is constantly evolving, so stay informed and adjust your trading strategy accordingly.